Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Triple Q report for Thursday, February 3rd, 2022. Before we look at the charts, as usual, I just want to encourage you to please click like each and every time you watch the daily Triple Q report. It does help us out a great deal in being found on YouTube, which is important for us, getting the word out, people who search for Triple Q analysis, Nasdaq-100. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. And that includes the daily Triple Q report. So, seeing it early, certainly before the opening bell, is to your advantage for your own trading and analysis. So let's take a look at the charts. Just a reminder that 2 weeks ago, yesterday, it was on a Wednesday, we settled below this long-term channel bottom, then indicating 326.16 as a 3 to 5 week target. So, we're 2 weeks into a 3 to 5 week sell signal, despite the fact that we've had what I'm going to call a short-term counter trend rally up to 374.91. Now, I can identify 3 different time frames here, 2 anyway. 326.16 is long-term support. So through 2022, there's no doubt in my mind that the Triple Q remains constructive, remains bullish. And though closing below 374.91 was a midterm sell signal, 3 to 5 week sell signal within the confines of a long-term 2-year bull run that's projected off that March 2020 low. And then short term, we did have a buy signal earlier this week that does indicate, and still, that 374.91 midterm resistance area. Let's take a look a little closer at the charts. 374.91 is still just the beginning of a narrowing range of resistance up to 379.07. 379.07 is a descending 2/3 speed line. This area, if tested today, for instance, can absorb buying through February. And from here, we can quite easily fall back to the lows from a week and a half ago and even down to that 326.16 formation within 3 to 5 weeks of testing 374.91. On the way up today, 369.31 still has the ability to contain initial buying pressures, and if we push through 369.31, we could test 374.91 intraday. 369.31 is nothing more than that spike low from earlier in January. It did roughly contain yesterday's highs. We pushed through it almost a full point. 370.10 was the high, and then we backed off really for the rest of the day. And then downside today, we have that former channel top we settled above 3 days ago, today at 362.58. I'm going to open the chart up a little bit more and show you that 362.58 is backed up by a new rising 1/3 speed line that's projected off the move low from a week and a half ago and uses Wednesday's high as its sort of calculation. 361.56 to 362.58, almost a perfect 1-point range, able to contain session weakness, and above which we should continue in to that mid 370s at 374 and change area over the next day, 2 or 3. If we do, however, close today below 361.56, a good high probably through next week. I would then anticipate 2 to 3 days continued weakness down to the 347.15 to 347.88 area. And that is nothing more than a new rising channel bottom and rising 2/3 speed line. So, I've been saying that if you close below, say, the rising 1/3 speed line, your next target is the rising 2/3 speed line. And so that's illustrated pretty well right here. So if we close below 361.56, we should then fall back over the next few days into the 347 handle and rising daily. Let's take a look at the support and resistance for today. You can see that 361.56 to 62.58 area, that rising 1/3 speed line and former channel top, able to contain session weakness, and above which 374.91 remains a 2 to 3 day target. On the way up today, that 369.31 low from early January can continue to contain intraday buying pressures, below which we could fall back into that 361, 362 handle support. But if we push or open today above 369.31, being a Friday and all, I think we could quite easily test that 374.91 long-term channel bottom, the start of a narrowing range of meaningful resistance up to 379.07 that can contain buying through February. And once tested, the market can fall back into the 320s by the end of February or into early March. If we were to close above 379.07, then we have a meaningful buy signal. In fact, let's take a look at that right now. If we do close above 379.07, that 408.71 high from November is likely to be realized within probably 2 to 3 weeks. And as I've been saying, I do think the 420s are likely as we continue into March trade if we close above 379.07. Let me see if there's anything else to mention. I'll just leave you with this image. Let's take a look at the downside one more time with the support and resistance. You know, if we do break 361.56, 356.37 is in reach today, while closing today below 361.56, as I showed earlier, should then yield 2 to 3 days bearish continuation down into the 347.16 to 347.88 area. So if we close today below 361.56, I would expect by Wednesday, Tuesday, so of next week, that 347.16 to 47.88 area where we could actually bottom out through the rest of next week. And if we were to close below 347.16, that actually pivots the market aggressively south into later February. I would then anticipate that 326.16 level within just a week or two of closing below 347.16, where once again we can bottom out for the year. I think that pretty much covers it. I ask you to click like each and every time you watch the Daily Triple Q Report, and I will be back tomorrow for Friday's Daily Triple Q Report. You have a great day.